Hi, everyone. So, welcome to section 4 in our discussion on financial accounting as we continue with the introduction and the section A aspect of the syllabus. So far, we spent some time to look at the types of businesses that are available. We've looked at the uses of financial information and also, most importantly, spent some time to look at the various things that you need to understand when it comes to the elements of financial statement. These are three thematic areas that you need to understand, and the examiner is going to be setting some questions around there. And so we want to go to our next discussion, looking at the regulatory framework for financial accounting or financial reporting. Then after that, we will look at the qualitative characteristics of financial statement, and then we will continue with our discussion. So I hope you're ready. Let's get into it. Let me share my screen with you, and then let's begin the journey with that. So coming up. Okay, we good. So the regulatory framework, the regulatory framework. Ah, my pencil messing me up again. Give me a moment. Let's see if I can pick it up from here. Okay, all right, we're good. So the regulatory framework. Now, so when it comes to financial accounting, by extension, financial reporting, preparation of financial statement, and all that, there are certain principles, certain rules that governs how these things actually work in practice. I mean, we don't just allow businesses to prepare financial statement the way they feel like presenting the financial statement. So there are laws, there are standards, there are various principles that they must use to prepare the financial statement. So the things that provides the guidelines for the preparation and presentation of financial statements are what we refer to as the regulatory framework. The regulatory framework. So let's look at it. Now, when it comes to the way financial accounting it's done and financial reporting is done, there are a number of factors that have influenced financial accounting or that have shaped financial accounting over the years. The first one definitely is laws or local legislation, because I mean every country has its laws, its rules that governs the way various things are supposed to be done. Then accounting concepts and individual judgment. We're going to come to that. We have come to the accounting standards, other international influences, then the generally accepted accounting principles, and then fair presentation. So we're going to take these one after the other and spend some time about it. So the national or local legislation. So every country requires the way financial statements are supposed to be prepared. As such, there are rules, laws, regulations that governs various ways that they have to do. The company's code gives 2019 Act 2019 gives a guideline on how organizations are supposed to prepare their financial statement and audit their financial statement. Not only that, the Banking Act, the National Insurance Act, and all of the various acts in Ghana governs various businesses in various industries in how or on how they can prepare the financial statement. So that is the first level of influence that has shaped the way financial statements are prepared, financial statements are presented by various organizations. But it doesn't end there. There is also the second category called the accounting concepts and individual judgments. The accounting concepts and individual judgment. What happens is that financial statements are prepared on the basis of a number of fundamental accounting assumptions and conventions. And we'll look at all these later on, like the matching and accrual concept, the business entity concept, the going concern concept, the prudence concept, the historical concept, the realization concept. All these are various accounting concepts that are used in the preparation and presentation of financial statements. And we're going to be looking at these later on as we move ahead in that case. Then we come to accounting standards. Definitely, accounting standards, because of the fact that if we allow people to just use accounting concepts, then they are going to prepare their financial statements using their own judgment, their own feelings, their own thoughts in that case. But then when that happens, it is not going to enhance comparison of financial statements of one entity with another entity, or with one industry with another industry. So to bring some level of unism or uniformity, the third category of the factors that influence or shape financial accounting and financial reporting is the accounting standards. So one of the issues that you'll be looking at really deeply in level two, even though in this level or at this stage, we're going to be discussing a number of things. It's not going to be as deep as we're going to be discussing in level two, financial reporting, and in level three, strategic business reporting, or corporate reporting for CA students. So international financial reporting standards are something that we're going to be using, the IFRSs and the IASs. Now, these are developed by the International Accounting Standard Board. But let me give you an idea of what we have. The International Accounting Standard Board is simply an independent, privately funded body that develops and approves IFRSs. Now, up until 2003, the International Accounting Standard Board, the standards they issue, they call them International Accounting Standards. But then after 2003, they decide to redesign the accounting standards so that they can bring conformity with the accounting standards that are used in in Europe, in part of Asia, in Africa, so that it will conform with the Americans. The American standards are different from the IASs. But then the International Accounting Standard Board wanted to bring the relationship so that companies in the US can still apply the IFRSs and it will still be comfortable. So in an attempt to bring uniformity of the accounting standards across the world, from 2003, they started issuing new standards, started revising old standards, and these new standards issued the IFRS. So the difference is that IASs are accounting standards, IFRSs are accounting standards. But the idea is that prior to 2003, the accounting standards that are issued are called the International Accounting Standards. But after 2003, to enhance that uniformity, now we issue International Financial Reporting Standards. So when you see IFRS 1, IFRS 9, IFRS 16, IFRS 3, all these are new and revised standards to be able to bring that conformity to the other standards in that case. So what happens is that the Institute of Chartered Accountants Ghana, it's a member of the IFRS, International Federation of Accountants. That's why this thing is adopted in various countries in that case. So members of the International Accounting Standard Board come from several countries and have a variety of background, okay? So the International Accounting Standard Board operates under the oversight of the IFRS Foundation, okay? IFRS Foundation. So the IFRS Foundation, formerly called the International Accounting Standard Committee Foundation, is not for profit, private sector body that oversees the International Accounting Standard Board. So I don't know if you can see the chart now. We're going to see the chart in a moment, but this is how the chart works by. So we have the monitoring board, okay? Then we have the accounting, International Financial Reporting Standard Foundation. Then that foundation supervises the works of the International Accounting Standard Board. And there is also the International Financial Reporting Standard Advisory Council. And there is also the International Financial Reporting Standard Interpretation Committee. What happens is that the monitoring board appoints the International Accounting Standard Board. The International Accounting, the IFRS Foundation reports to the monitoring board, and then the IFRS Council, Advisory Council, provide advice to the foundation as well as to the Accounting Standard Board in the preparation and development of new accounting standard. Then the same thing, the Interpretation Committee also advises the International Accounting Standard Board and reports to them on various things. So let's get a breakdown of some of these things, because sometimes the examiner can mess you up to ask you about the roles, the objective of some of these institutions as they form part of the development of various accounting standards across the world. So what is the objective of the IFRS Foundation? One, to develop a single set of high quality, understandable, enforceable, and globally accepted IFRS through its standard setting body, the International Accounting Standard Board. So the goal, the objective of the IFRS Foundation is to develop standards that will be globally acceptable, that will be globally understandable, that will be globally enforceable. However, they cannot do that on their own, so they do that through an independent body called the International Accounting Standard Board. Two, to promote the use and rigorous application of those standards. So not only do we develop, but then it has to be adopted. So they must promote the use and rigorous application of these standards. Three, take account of financial reporting needs of emerging economics and small and medium scale enterprise, meaning that they have to be observing what is going on within various emerging economies and find out, is there any new standard that we need to bring out? Is there any new development? Like currently there's coronavirus and it has affected a lot of businesses. So the IFRS Foundation is looking at various things that they can do. If there are some modifications that they have to do on the various some accounting standards and presentation, financial instruments and all that, how they can shape all that. So not only do they develop, not only do they promote that the standard be adopted and applied and followed in the letter, as well as the spirit, but also they observe emerging economies and small scale medium enterprises. And we have IFRSs for SMEs. Okay, so we have IFRSs for SMEs, small and medium scale enterprises. And later on, as you move ahead, you will understand some of these things. And then four, bring about convergence of national accounting standards and IFRS to a high quality solution. So convergence, that is very, very critical, so that the national standards will just be the same as the international financial reporting standards. Now, yes, that is not going to be the same equally, because laws are going to change in countries, but that is the goal of the International Accounting Standard Board. That is why in Ghana here now, we are using the IPSAS, International Public Sector Accounting Standards. These are accounting standards developed by the International Public Sector Accounting Standard Board. And they are standards developed for the public sector organizations. And Ghana has adopted this IPSAS in that case. And you will learn about this later on in level 2 when you are doing public sector accounting and finance. So the goal of the IFRS Foundation is to ensure the convergence. Now, these IPSAS are just taking the IFRSs and try to nationalize them and try to contextualize them in laws and rules in that case, and how public sector entities can use them for that. Then the IFRS Foundation is made up of several trustees who essentially monitor and fund the IASB and IFRS Foundation and IFRS interpretation. So that is the diagram you see there. So let's look at, so we look at the foundation. Let's look at the advisory council. The IFRS Advisory Council, formerly known as the SAC, Standards Advisory Council, is essentially a forum used by the International Accounting Standard Board to consult with the outside world. It consults with national standard setters, academics, user groups, and a host of other interested parties to advise the IASB on a range of issues, from the IASB's work program for developing new standards to giving practical advice on the implementation of particular standards. The IFRS Council meets the IA at least 3 times a year and put forward the views of its members on current standard setting projects. So that is it. So they are there to play an advisory role, and because they are made up of national standard setters, academics, professors in various high institutions, other user groups, other interested parties, they provide various ways through which the standards could be actually applied by the institutions and all that. Then we have the IFRS Interpretation Committee. Now, the IFRS Interpretation Committee, which is formerly known as the IFRIC, was set up in March 22 to provide guidance on specific practical issues in the interpretation of IFRS. So, this is what happens. Let's say, not let's say, in Ghana, for instance, this is in taxation. You do this in level 2, but I want to use that as a guinea pig to illustrate to you what is going on. You see, our tax laws states out how things are supposed to be done, various tax rates for various institutions, various organizations. If you're a manufacturing company, you're a hotel company, you are in the mining and oil exploration, there are rules on how you can carry over losses. There are rules on how much tax you're supposed to pay. There are rules on how much money you need to put in a decommissioning fund so that after you finish your mining, you will be able to landscape the place and restore the place to a bare ground. In that case, there are laws that governs that. However, as time goes on, these laws are not well understood by the taxpayers. So what the Commissioner General of the GRA does is that they publish a document called the Practice Note. So the Practice Note is the document issued by the Ghana Revenue Authority, by the Commissioner General, detailing out the practical application of the letter of the law, right? Now, that same thing is what the IFRS Interpretation Committee does. When the International Accounting Standard Board brings the standard to play, yeah, they just stated that, okay, this is it, this is it, this is it. But what are the practical application of the standards? The Interpretation Committee does that. So anything that is not really clearly outlined in the standard, and we need further clarification on the circumstances under which those clauses, those subsections of the standard will be applied, then the International Financial IFRS Interpretation Committee comes in to tell you the practical application of those rules. It's like someone says he doesn't understand a clause or a subsection in the Constitution. Then the person goes to the Supreme Court. And we've seen a couple of cases in the past where people go to the Supreme Court to seek an interpretation. Why? Because the legislature, the Supreme Court, is the one who interprets the law, even though the law is made by Parliament. I hope you are getting the idea. So these are some of the things you need to understand. So the International Accounting Standard Board makes the things. However, they are going to be interpreted by the IFRS Interpretation Committee on the various things that are not clearly outlined, or that are a bit ambiguous, or that may have double interpretation in the standard. So that is the role basically of them. So two roles they play basically: to review on a timely basis newly identified financial reporting issues not specifically addressed in IFRS, right? So if something is not addressed specifically in the IFRS, they review it. Then two, to clarify where unsatisfactory or conflicting interpretation have developed. So maybe the standard says that, like, let's say IAS 16, okay, property, plant, and equipment. It's one of the standards we'll be playing with later on. And the standard says that we need to revalue assets. Okay. On what basis can we revalue assets? Okay, someone can say, all right, I can revalue assets based on the market value. I can revalue the asset because there's a new project that is done by the government. Yeah, you can do that. But the IFRS comes in to give you a blueprint on the various circumstances under which we can say that the value of the asset has gone up or the value of the asset has come down. So that is the idea about the IFRS Interpretation Committee. Does it make sense? So let's expand a little bit on the IFRSs, and then let's look at issues about that. The use and application of IFRSs. IFRSs have helped both improve and harmonize financial reporting around the world. The standards are used in the following ways. One, as national requirements. So like we said earlier, they are integrating them so that, I mean, there will be convergence between the national laws or the national standards as well as the IFRSs. Two, as a basis for all or some of national requirements. So the IFRS becomes the basis because of the fact that it is international. When countries are setting their national standards, they kind of reference the IFRSs in the preparation or in the development of their standards. Then that fuses into the point I just mentioned as an international benchmark for those countries who develop their own standards. So, I mean, if you are doing something, you need to have a benchmark, you need to have a standard on how you feel the thing has to be done. So, who becomes your standards? Who become your benchmark? So, if Ghana, we are developing national standards, who do we look up to? You look up to the IFRS because, I mean, that is a top quality standard setting thing. By regulatory authorities for domestic and foreign companies, and then by companies themselves in that case. But a key question we ask ourselves is, okay, what is the standard setting process generally? I mean, how do we actually set standards as an organization, as an institution in that case? How do we go about it? How do we set standards in that case? So the way we set standards, it's summarized in the diagram below. I mean, it goes through a lot of due process uh, in that. So the procedure can be summarized as follows. Number one, consultation group, board. We have the steering committee. A discussion paper is issued for public discussion. Then an exposure draft is issued. Then the IFRS comes out in that case. So let's see if I can share some thought on this real quick. So remember the diagram we showed here, the IFRS Advisory Council with the interpretation committee, I mean, when they realized that there is an issue coming up, then they said, okay, can we start work on a project? Then they start. So they come in, they come together, da da da. Then the International Accounting Standard Board looks at it. Okay, is this something we need to look into? Yeah. Then they start to look into it. Then they start develop some idea. They look at their own internal things. What are things they can do? The research and all that. Then they take it to the steering committee, still part of the IFRS Foundation, and also part of them. And they look at it and say, okay, yeah, let's pursue it. Then they bring a document out and say, hey, we are trying to develop a new standard called IFRS, whatever. And so we need the public input. So they publish that document, then academicians, auditors, national standard setters will bring up their opinion. So they sort of populate opinions from the public. Then from there, the opinions they gathered from the public as well as what they did internally, they will now summarize it to a standard that they want to develop, and that is what is called the exposure draft. Then they bring it back to the public domain for input. So, okay, yeah, this conclusion is okay, this summarization is okay. Then from there, they bring it back, look at it, and then a new IFRS is actually issued in that case. Now, so there are numerous accounting standards that you need to know about, numerous accounting standards that you need to know about. And like I said, some of these things are really going to be looked at later on as we discuss the issue. We're going to be interested in this one, presentation of financial statement, inventories, cash flows, events after the reporting period, IAS 16. Now, this standard has been replaced by another standard called IFRS 15, revenue from contract with customers. revenue from contract with customers. That standard, these two standards, okay, they are no more there. They are replaced by this particular standard here, IFRS 15. And we're going to spend some time on probably this provisions and then intangible assets. Remember, I told you about them earlier in the discussion. Now, for those of you doing ACCA, I mean, consolidation, it's in ACCA financial reporting level 1. I'm hoping that as we go, when the next syllabus is revised, consolidation will come to level 1, introduction to console will come to level 1, so that it helps students as well in the ICA. But in the ACCA F3, we have consolidation. That is why you see this standard asterisk there, because this is a consolidated standard. This is a consolidated standard. This is a consolidated standard. This is a consolidated standard in that case. But the ones that I've ticked out in red, 1, 2, 3, 4, 5, 6, 7, 8. I mean, these are the 8 standards that we're really going to be excited about at this level. But when you get to level 2, I mean, you're going to look at almost all of the standards that I've listed here in that case. Okay, so IFRS 15 is even here. We still have the 10 and 18, but those ones have been replaced, like I mentioned. Right, so the next thing we want to look at is the scope and application of IFRS, the scope and application of IFRS. Any limitation of the applicability of a specific IFRS is made clear within that standard. IFRS are not intended to be applied to immaterial items, nor are they retrospective. Each individual standard lays out its scope at the beginning of the standard. And you're going to be looking at this probably later on, but when you pick every standard, you see the objective of the standard, then you see the scope of the standard, what the standard cover, what the standard doesn't cover in that case. Then within each individual country, local regulations govern to a greater or lesser degree the issue of financial statement. So you got to be careful that, yes, we are going to be applying IFRSs, IASs in the preparation of financial statements, but we are not going to be ignoring our national laws, our national standards. So there has to be some level of conformity in that case. So that is what you need to understand about the regulatory framework there, the regulatory framework there. Does it make sense? Any question on that? You know what to do. Send it up, then we go. So that is it about this. In that case, I don't know. I will see you in the next lesson as we start with qualitative characteristics of financial statements. So I'll see you in the next lesson as we go on with that.